Hello, everyone, and welcome to the January Real Talk About Real Estate. My name is Michelle, and I'm the marketing lead for the ABR designation. Today, I am joined by Gonzalo Mejia, who is the team leader for Dream Home Team, Watson Realty Corp. We're so excited to be kicking off 2022 with our first Real Talk of the year, which is all about debunking the myths of VA and FHA loans. As a reminder, we are live, so if you have any questions or just want to say hi, leave us a like or a comment on the video. Gonzalo, we want to know it all. Why is it important for buyer's agents to be knowledgeable about these types of loans and proactively promote them to seller's agents?
So what I will say, and thanks for having me, by the way, always fun to be here and always glad to share some information. So people need to remember first, why we have FHA and VA loans. What was the goal for them to be created? Because that explains why they are important. And the FHA and the VA loans become such important tools to get the American economy going. FHA allow people to be able to get into houses. You ask the average American, how do you create wealth? Well, there are many ways to create wealth. The number one way how Americans create wealth is how? Home ownership. So that is one of the key of our economy is, can people own houses? And that's why we as realtors are all about home ownership. So when the FHA program was created, the idea is how do we get people to be able to get into houses in an affordable way? The VA was very similar. It was created after World War II and with the same idea. Now we have all these people who have served our country, who are coming back into our society. How do we get them back into it? And homeownership was the key to it. So these are extremely important tools that keep the cycle of real estate and the cycle of our economy up. So we need to protect them. And that is an important goal of NAR. It is we need to protect FHA and we need to protect the VA. And the issue right now, especially in today's market, where it is a very strong seller's market still in most places, and I heard things might be turning around in a few markets, but in general, it's still a very strong seller's market. What I have noticed is that people see FHA and VA loans, and by people, I mean sellers, and I mean also many real estate agents who see it as they are not good loans, that it is better not to deal with FHA and VA. It is better to deal with a conventional loan or with a cash buyer. Of course, cash, always helps, no question about it. But it is when there are multiple offers, I see sellers and agents who say, well, this offer is an FHA or VA. So let's don't focus on those ones. Let's pay attention to the conventional offer because that is going to be better. And it's those misconceptions that somehow a buyer who is applying for a conventional loan somehow is going to be better than the buyer applying for an FHA and VA loan. There are some differences that have to be kept in mind, but however, there are many situations where that buyer who is getting an FHA or VA loan has a higher chance to get the loan approved than the buyer who was trying to go conventional. And that's what we want to talk about today is what are those myths? What are people thinking how these FHA and VA loans work so people can get over it, literally.
Yeah, seriously, they should get over it.
What do people think about FHA and VA? And number one, they think that they are more difficult for borrowers to be approved for an FHA and VA loan. Actually, it can be the opposite. The rules to qualify for a conventional loan are usually stricter than the rules to qualify for an FHA or a VA loan. The ratios are lower, meaning that the proportion between the expenses and the income of that buyer are much more stricter on a conventional loan than on an FHA or a VA loan. So you can have a conventional buyer who is like really pushing it to get approved to the conventional loan. Well, you have an FHA buyer that because the ratios are so much higher, they have plenty of room to get qualified for that FHA loan. The thing is, there is that conception. It's going to be more complicated. Now, something is true. Some people have to go FHA because they don't meet the criteria to qualify for conventional financing. But that doesn't mean that there are no good borrowers. That's what the FHA loan is there for. It's like, oh, you don't qualify for conventional? Well, maybe FHA works better for you. And I was telling you this story before. When we purchased our home, which, by the way, this is my house. Welcome to my house. Not much longer. We're set soon and buying a new house. We're building a new one. But when we bought this house 5 years ago, we went to our lender, and I went thinking, I'm going to get a conventional loan, And after I talked to my lender is like, you're better off if you go FHA. The interest rate for an FHA loan right now is so much better that your payment is going to be lower if you go with FHA right now. And that's what we ended up doing. And not because, we couldn't do conventional, because, that's the only thing we could do. It was the best thing to do for us at that point. Now, people say, oh, well, Gonzalo, there is a mortgage insurance premium, the monthly mortgage insurance you have to pay. That is correct. Even with the mortgage insurance, our payment was lower. Now, after a few years, we did refinance the property. Once the value went up, we refinanced into conventional without mortgage insurance, and our payment went even lower. But people think that the UFHA is because something is bad, when actually it can be something good. Why do some people go VA? Because many of these veterans have the ability to buy a house with 0% down. Hey guys, if I ask any of you, hey, you have the chance to buy a house with 0% down, and still get a good interest rate. Yeah, exactly. Like, who wouldn't say, oh, no, I don't want to do that. And I get it. Of course, the more money you put into the house, the larger the payment, there's other financial benefits. But when there is an opportunity for somebody to buy a property with 0% down, that is one of the great advantages of the VA loan, then why to pass on it? And why would somebody be punished? Because they are taking advantage of an opportunity that has been given to those who have served our country. So it is kind of like they say, like, hey, we appreciate your service. Thank you so much for doing it. We're going to give you this great opportunity. You can use this financing that is going to be more convenient for you. And then we turn around and say, no, we don't like it. I'm sorry. That is mainly what we're doing when we're telling somebody no to a VA loan just because it's VA. Now, there are the topic of property condition, and that's what a lot of people get stuck with. There are rules regarding property condition. There are different on a conventional loan, on an FHA loan, and a VA loan. So that is true. There are different property condition requirements. Now, starting with FHA, the rules now for FHA loan regarding property conditions are not like they used to be years ago. I've been in the business 17 years, because back in the day you could pay your license at 12. And back then, I remember one of the conditions for an FHA loan was that the property had to have a stove. Like, you couldn't sell it and there was not a stove. Now, fun fact, the stove didn't have to be in working condition. The stove didn't even have to be in the kitchen.
Really?
Yes. So
wait, would a fireplace count?
No, I don't think it counted. But what we had to do is we will bring stoves and put them in the garage in houses. So when the FHA appraiser will go, we'll see, oh, there is a stove. It's not in the kitchen. It's not working, but there is a stove. It's literally standing in the middle of the garage. We will get it approved. Now, that rule is gone. There is no such requirement anymore. And like that, some other requirements have gone away. Where really the property condition requirements for an FHA loan and a conventional loan they are not necessarily that much different. Now, what happens, and here is where a lot of agents and sellers get confused. Lenders can have what is called lender overlays. What is an overlay? An overlay is when a lender includes an additional rule above what is required by the standard loan. A common overlay, FHA loans, you can get an FHA loan with as low as a 580 credit score. With a 580 credit score, you can get an FHA loan. However, a lot of lenders don't like it. They say like, no, if we're gonna do this loan, we want at least 600 or 620 or 640. That is an overlay when a lender adds rules. Lender can do overlays on any kind of loans, including conventional loans. They can say, I want this condition. For example, something, being in Florida, something that we discuss a lot is termites, wood destroying organism inspections. A lot of people think, when you're going to get an FHA loan, it's a requirement to have a termite inspection done. Actually, there is not. There is no such requirement. FHA does not require to have a termite inspection done. However, some lenders can ask to have it in any kind of loan. So in that one, some people get confused and say, I did this FHA loan and they require a termite inspection and they just added so much more to it. It was not the FHA loan. It was because that specific lender had that overlay. Now, with VA, the conditions are a little stricter. VA does require a termite inspection. And there are properties that, in general, are hard to finance. A property that is in poor condition, a property that needs major renovations, they're hard to finance, regardless is a VA, FHA, and conventional. But definitely, like one time we were selling this property. It was a property built in 1914 or 1917. I cannot remember. And it was a house. It has so much wood siding, and I had minor wood rot all over. We knew that it would be too hard to make it work with a VA. So yes, there might be special situations where the property condition can be a challenge to finance in general, where I can see a little more restrictions. But if the property is habitable, is in decent shape, you can finance it, even with a VA or an FHA loan. And the other one thing that people get stuck with is that somehow VA or FHA loans are more expensive to the seller. And I have gotten this a lot, where even, when I have worked with sellers and I say, we received this offer and it's an FHA loan, and they're like, oh, no. And I say, why not? And I say, because I'm going to have to pay additional fees. And I said, like, no, you don't. There are two exceptions, but they are minimal. On FHA, there is a fee that is called the tax service fee. That if the lender charges a tax service fee, then the buyer cannot pay. Doesn't say that the seller has to pay, but the buyer cannot pay it. Now, I haven't since the CFPB changed the rules regarding closing disclosures, I personally have not seen any lender separating the tax service fee. Now, before then, it was like around $75 to $100. I saw actually a post on our, I think, ABR group, I think it was last year, when somebody said, hey, I just came across where this one lender had separated the tax service fee and the seller, or the buyer couldn't pay it. And we say, oh, that's uncommon, but it's extremely uncommon. And again, even when there is there, it's a minimal fee. And with VA, is the termite wood destroying organism inspection, where the buyer cannot pay it. Now, again, doesn't mean the seller has to, the agent could. And, if now, thankfully in Florida, we have an exception to that rule. In Florida, the buyer can pay for the WDO inspection. But if I was working, with a military buyer, and to make the transaction work, if they cannot pay the termite inspection, being honest, and this is a business and personal decision, I will pay the $150. I mean, what I'm going to make out of that transaction is way more than that, and I'm helping a family who deserves to have a home. So I will have zero problem because it's such a minimal fee. So there is not really more expensive loans. There is not much more complication from the seller. And like I said, people just need to educate themselves better. Because I have called agents, and this happened when I work with buyers who are getting FHA financing. I find a listing in the MLS. I check, and it says possible financing, and it says cash and conventional. And I call the listing agent, and I say, hey, I see that on this listing, you're only listing cash and conventional. Is there a reason why it cannot go VA? And sometimes the answer is, oh, not really. That would be just the preference. And I ask, what is that the preference? Because I see that opportunity sometimes to educate. And I say, oh, because the seller is concerned about the extra closing costs. And I say, what extra closing costs? And I say, aren't there any? I say, like, not really. In that case, we should be good. So there is a lot of times where it just takes one phone call, trying to understand what the hesitation is, to then clarify, no, that shouldn't be a problem. We can move forward. Because, again, a lot of people out there just don't know how it works.
Totally. And, I was thinking about what you were saying with the property with like the wood rot. And that was making me think about the rehab mortgages. And I know there's VA and FHA rehab mortgages as well. So how do those work, and which one would you recommend in that case, FHA or VA?
Yeah, great point. Because that's another great tool. When there is that hesitation, well, I have an FHA or VA buyer, they want this property, and I still feel that the property condition could be a challenge. FHA and VA, as well as conventional, but FHA and VA, a lot of people don't know this. You can do a renovation loan. What it means is that when the buyer qualifies for a renovation loan, let's say that the lender pre-approves the buyer for $400,000 for a renovation loan, and it has to be clear that it's a renovation loan. Don't make the assumption that because they're qualified for a regular FHA, they can qualify for a FHA renovation or VA renovation. So be sure you're talking to the lender. So, but let's say that a buyer is qualified for a $400,000 renovation loan. They can mix and match a combination of a purchase price for the property and an amount for renovations. So let's say they go to see a house, and the house has some wood rot. Maybe the roof is old, or maybe they just want to make it look better. Hey, I want to change the flooring. I want to, upgrade the kitchen. So what the buyer can do is, let's say the house is $300,000. They can go and offer the seller, hey, I'll pay you $300,000. But what they negotiate with the lender is an additional amount for renovations. Now, those renovations have to be clearly stated. You cannot say, hey, give me $50,000. They have to give a list of what work needs to be done to the property. There have to be quotes from approved contractors saying, yes, this is how much this is going to cost. And the appraiser is going to go to the property with a list of renovations and is going to appraise the property as if it was renovated already. Because what they're trying to tell the lender is, if you give this buyer this much to purchase the property, this much to renovate it, so once all that money is out, what is going to be the value of the property then? And that the appraiser is going to look into that. Now, there is an advantage when you go FHA on these kind of loans, that FHA allows you not to appraise, and it gives you a leeway where the total investment purchase by renovations can be higher than the appraised value. Because something that they recognize is that sometimes you can put money into a property, do some renovations, and you don't get 100% return. So because FHA has a percentage that you can be off from the price value, they tend to be many times the most common use. But you can do it with VA as long as they're not doing major renovations VA renovation can work just fine. Like we're saying, like the wood rot. And like, hey, this house wouldn't qualify for VA because it needs wood rot. Oh, a VA renovation can fix that. So there are tools out there. We just need to be educated about them and to educate our customers about it, let them know about the potential about these kind of loans like renovation loans.
Yeah, I totally agree. And then I guess I'm also wondering, because you're in Florida, you're obviously near a lot of military bases. And what about the people who are like, well, I don't live near a military base. Why do I need to educate my clients and the sellers agents about these types of loans? Actually, I think you said it might even be more important for those types of people.
Yes. So I'm in Jacksonville, and in Jacksonville we have 2 military bases. So we are very familiar with work with people in the military. VA loans are common here. Listing agents are not surprised when we receive an offer with a VA loan because we get them a lot. So because of that, I think we feel that probably a large amount of agents in our area understand clearly how to work with that. The challenge is those agents who might work in areas where they don't have military bases. But remember, the VA loans is just not only for active duty, but are those who already have served and now are looking to retire. And they might retire in an area where there are no bases because they are not active duty anymore, but they just want to be close to family or in an area that they like. And so it's especially in these areas where VA loans might not be as common, where agents need to educate themselves and be like, hey, what do I do if? Because they are not used to it as much, and where they're going to have to probably educate more the other side of the transaction, because it might be a seller and an agent who have never in their life before have seen a VA offer, and be ready to explain, hey, this is what VA offer means, and what it can be an advantage to this for the seller. I something that we do at listing agents when we receive offers is we contact the lender. And we chat with the lender and say, hey, we have received an offer with a pre-approval letter from a borrower that you have reviewed. Can you tell us about them? Have you reviewed their income? Have you reviewed their assets? Have you reviewed their credit? And I tell you, somebody might come with a conventional loan and I call the lender and they say like, well, we haven't verified their income, or, we're still trying to gather some documentation. And I call another buyer because we got multiple offers and it's a VA buyer, and the lender tells me, oh, we already checked all their income, we already have their certificate eligibility, we have their assets, credit is great, ratios is not a problem. Trust me, that looks like a much more stronger buyer that conventional, that I don't even know if they're going to be able to qualify for the financing or not. So we really need to stop prejudging those offers and prejudging those buyers based on their financing. What we need to do is get the information, get the answers, and yes, sellers, have to pick the offer that is better for them. But it shouldn't be based just on the type of loan. It should be based on which one of these buyers bring me the best terms and the higher chance that it's gonna close. Because I always tell sellers, getting offers in today's market is not difficult. What we need to be sure is that we can make it close. And sometimes these FHA and VA buyers have a much better chance to close than those conventionals that we're not sure they're going to qualify for the financing.
Yeah, I mean, I love that. I think that's a great pitch. I'm sold. And I know also NAR's 2022 President Leslie Ruda Smith has been dedicated to removing barriers for veteran homeownership. And we've got like 180,000 members of NAR who are veterans or have a spouse or a partner who is a veteran. So that's definitely not a small amount of people. So I also want to remind everybody about the military relocation professional certification, the course, which is 6-hour course. and it was updated last spring. And it's also an elective for the ABR designation. So if you're kind of like, well, I think I need some more information on working with military clients, that's a great place to start taking that course. And then we also have a consumer one sheet on Rehab Mortgages, which you can customize in the Reback print shop or download from the member center at abr.realtor. And last but not least, we also have a blog post on homebuying.realtor on Rehab Mortgages, FHA, VA loans. And that's a great source of information. If you're like, I want to do everything Gonzalo said, but I need the words to do it, just go ahead, take a look at that blog post, and you can share that information with your clients. So really good information at your fingertips. Make sure you're utilizing it. I just want to remind everybody that if you have any questions, feel free to comment on the video. If you're watching after the fact, feel free to tag Gonzalo. He'll probably answer. He's very active in the group. And I don't see any questions right now, so I think we're going to wrap up. So I wanted to thank you so much, Gonzalo, and to everyone for joining us. We hope you are now equipped to advocate for VA and FHA loans. Please join us next month on February 23rd with Brian Finley. See everybody next time.
Bye, everybody.